Norway's £740 billion sovereign wealth fund announced it will continue to invest in Britain despite uncertainty over the country's departure from the EU. The fund, which is the world's biggest, takes a percentage of oil and has revenues and invests it around the world. Last year, 5% of the fund was invested in Britain, spread across equities, bonds and real estate. The fund's CEO Yngve said, "We will continue to be significant investors in Britain." He added, "And we foresee that over time, that our investments in the UK will increase." However, the fund's British investments declined in value over the past 12 months. He said, "With our time horizon, which is 30 years plus, current political discussions do not change our view of the situation." Even so, Britain's share of the fund's portfolio slipped below Japan's to third from its usual spot and second behind the United States. Slingsted said the dip was caused by a strengthening of the yen against the pound. And he said Britain was included in a broad-based global equities buying spree worth about £22. $5 billion from November to January, when the fund reckoned it was buying shares on the cheap amid turmoil on markets. The fund is one of the biggest foreign investors in Britain, as a co-owner of London's Regent Street, as a top 5 owner in firms such as HSBC and BP among others, and as a holder of roughly £6 billion of UK government debt. Slingsted also reaffirmed commitment to Britain even in the case of a no-deal Brexit. Norway is not a member of the EU, although it is bound by many of its rules. He said, "We see no operational consequences of any possible outcomes." He said that the fund had almost 250 staff in London and would stay at that level regardless of the outcome of the Brexit talks. Worldwide, the fund owns about 1.4% of all equities. Falls in stock markets meant that the fund, the equivalent to £145,000 for every Norwegian man, woman and child, had a negative return on investment of 6%. in 2018, down from a positive 13.7% in 2017. And it lagged its benchmark index by 0.3 percentage point. He continued, "This is the first time that the fund has had a considerable decline in value." The only other time was a slight decline in 2002.